And now an official warm welcome to everybody to today's Impact for Breakfast session. For those who are joining for the first time, my name is Deborah Keller and I manage the Global Impact for Breakfast Network, an initiative supported by Artha Impact, the impact investing arm of the FairCapital family office. Impact investing is an informal network. Impact for Breakfast is an informal network of family offices, foundations, funds, venture philanthropy, and intermediary organizations with a common focus on social entrepreneurship and social enterprises and impact investing. The specialized group has been gathering and growing since 2008, starting in London with an expansion today to 18 cities and chapters. Today's Impact for Breakfast session is the first of a two-part series on fair trade supply chains. In this first session, we will take a closer look at fair trade supply chains to understand the global system and its impact. Based on examples of sustainable supply chains, an eye-opening set of insights on the fair trade ecosystems, key success factors, and challenges will be provided by our two fantastic speakers, David Finlay, supply chain specialist at Fairtrade UK, and Christoph Gosdenoz, founding partner at FairCapital. As a heads up, in the second session on fair trade supply chains, happening on March 16, we will learn about the existing financing gap and talk about innovative financing solutions. More details will be shared with you in due course. Before we dive in today's session, I want to inform you that this session is being recorded. We will share the link to the recording with you after this session in a follow-up note, which you're welcome to share with your colleagues. As always, we welcome your thoughts, comments, ideas, questions, and for that, we have a dedicated Q&A slot after the two presentations. You're welcome to share your questions ahead and share them in the chat field so we know who would like to share a question with the speaker. And now, with no further ado, over to you, Christoph and David.
Brilliant. Thanks so much, Deborah, for that introduction. So my name's David Finlay. I work for the Fairtrade Foundation in London as the supply chain manager for cocoa, and it's a real pleasure to be with you today. Christoph and I are going to walk through two different presentations. I'll just load up my screen to share first before handing on to him. Just one moment, please. Great. So the purpose of the first presentation that I'm going to run through is to provide you with a snapshot of the global fair trade system and then to focus on the benefits that producers experience selling on fair trade terms with a particular focus on the cocoa supply chain. Secondly, I'm going to outline some of the financing challenges that continue to persist for smallholder farmers, including farmers who are members of fair trade certified groups. And I hope that establishes a good foundation for Christoph to then move into part two of his presentation, which will focus on some of the financing solutions which are available to smallholder farmers and some of the investment opportunities which present themselves to impact investors who are interested in investing in cash crop supply chains, including in fair trade certified cash crop supply chains. So with that introduction made, let's move straight into the fair trade system. Many of you will be very familiar with the fair trade mark on the left-hand side of the screen. We're the world's most recognized and trusted ethical certification scheme globally, working with over 2 million or just under 2 million smallholder farmers and workers in over 70 countries. We've developed over 50 product-based standards. Now these standards pertain to commodities from gold to cotton and coffee to cocoa. The sentiment behind our standards is to support farming groups to align with a range of ESG criteria. These criteria include, on the environmental front, conditions attached to things like the protection of forests, the stewardship of farmland using responsible chemicals and water sources. Socially, our standards support farming organizations to respond to complicated social challenges including child labour, through the development of child labour monitoring and remediation systems. And in relation to governance, we have a series of criteria in our standards which pertain to recommendations around how cooperatives are to be managed and governed, to ensure that these are democratic decision-making bodies which effectively represent and serve member needs. As you can see from the centre of this slide, producers who are Fairtrade certified, who align with all of those ESG criteria, are able to sell their produce into market on what we call Fairtrade terms. These terms include a guaranteed minimum price for their produce and an additional social premium payment. The guaranteed minimum price is paid by a trader to the cooperative in question, and the sentiment behind the minimum price is that the producer organisation and their farmer members will not sell their crops for less than the cost of production. So that's the basis on which the minimum price calculation is made. It's not there to artificially inflate the market price for a particular commodity, but really just there to kick in the event that the global price for a particular commodity drops below our average cost of production calculation. Separately, the social premium payment, which is made by the trader to the cooperative in question, is there for the cooperative themselves to vote on where they would like that money to be spent. And in general terms, the Fairtrade premium goes towards three different types of intervention area. The first is back into the farming businesses in question. So the premium may be used to spend on things like fertilizer and other inputs, which are procured by the cooperative in question and distributed to their farmer members. Secondly, investment may be made into the cooperative structure itself, for example, building additional offices and warehousing and storage facilities for crops to be stored in. And then thirdly and finally, the premium is often spent towards community level projects. So these projects may include things like constructing a school, building a road, a well, providing subsidies for school fees and so on. So the sentiment behind the way the Fairtrade system works in terms of trade is that in buying a Fairtrade certified product, you are part of this network of transactions where farmers receive a guaranteed minimum price for their produce, where their farming practices and the organisation of the cooperatives themselves are in line with world-leading ESG-based standards. And also in purchasing a Fairtrade certified product, you are helping to generate this additional premium payment, which goes back to the farming organisation to invest into their business, into their community, or into the cooperative structure itself. We recognise as Fairtrade that although a standards-based solution has been our bread and butter historically, that we want to move incrementally over time to explore other forms of delivering impact in cash crop supply chains too. So we're increasingly moving beyond standards in partnership with a range of stakeholders. We work with over 5,000 businesses globally, including many of the world's largest market actors in the cocoa ecosystem, including Mars, Mondelez, Ben & Jerry's, Tony's Chocolonely and more. And in the context of those kinds of organizations who have very sophisticated sustainability priorities and goals and large budgets for in-house supply chain programming, we're very much on hand to work in partnership with those organizations to deliver programs within their supply chains which meet farmer objectives as well as the objectives of the business in question. So these may include projects, for example, focused on themes like agroforestry, climate resilience, gender, income diversification, and more. Separately, we're also working with other stakeholders like institutional donors, national governments, and large trusts and foundations to also invest into equivalent supply chain programs which support farmers to experience additional benefits above and beyond the benefits they experience by selling their produce on fair trade terms. And finally, we're increasingly interested in working with financing partners who may be well positioned to help producer organisations to plug the gap between their existing financing needs and their ambitions as independent business units. Some of you may be familiar with organisations like Root Capital and Shared Interest, who have been working in this space for some time, providing finance to certified producer organisations. But we're seeing the rise of a new generation of more nimble impact investors also moving into this space. And as I mentioned at the start of this presentation, Christoph will be exempling some examples of impact financing solutions which exist today, particularly highlighting the work of his organisation, FairCapital. So with that introduction to the fair trade system given, I'd now like to walk you through our work in the cocoa sector specifically, and Christoph will be also focusing on example investments within cocoa supply chains to tie our two presentations together. What you can see here is a very simplified overview of a fair trade certified cocoa supply chain, and I'd like to take this opportunity to walk you through how this supply chain works, both from a financial perspective and also from a cocoa bean processing perspective. So you can see the different stages that the cocoa bean goes through from one end of the supply chain at the farmer level, right through to the other end into a semi-finished product in the form of a Ben & Jerry's tub of ice cream. On the far left-hand side of the screen, you can see an individual farmer. The farmers that we work with as Fairtrade in the cocoa sector are all smallholder farmers, which means that they own small plots of land and often multiple family members will work together on that plot of land to grow and harvest cocoa, bringing in seasonal labour when needed, either to tend to the pruning of cocoa trees and bushes, or else to tend to the collection of cocoa pods at the time of harvest. These smallholder farmers have a particular profile of farm size and average income level, which we'll come on to shortly. But once they have grown their cocoa, they will sell their cocoa into a cooperative structure. Now, the cooperative structure serves two main functions. The first function is to aggregate members' cocoa. So rather than having 1,000 farmers individually selling low volumes of cocoa into multiple traders, the cooperative structure enables the aggregation of cocoa from those 1,000 members to achieve economies of scale and to provide those members effectively with access to larger trader partners. The second function that cooperative structures perform is to service the needs of their farmer members. So, for example, a cooperative as an entity might procure inputs for their members in the form of fertilizer, which can then be distributed at a lower cost than if those members themselves tried to procure those inputs directly themselves. And the cooperative would provide those services to members in exchange for a fee. Now, once the cooperative has sold their cocoa into a trader, and I've given the example here of Barry Callebaut, who are one of the world's largest traders, the trader will then look to transform the cocoa bean in partnership with a processor into three constituent parts, into cocoa powder, into cocoa butter, and cocoa liquor. Now, these three different components are the basis for the manufacturing of chocolate-based products. And in the manufacturing components of the supply chain, manufacturers will make either finished products like block chocolate bars for retailers or finished branded products like Mars bars, or else semi-finished products, for example, chocolate chips that might end up in a tub of Ben & Jerry's ice cream. And for a partner like Ben & Jerry's, who are one of our largest partners today working with Fairtrade Cocoa, just to example how they work with cocoa in practical terms, they use cocoa powder to go towards the base mix of their ice cream. So that's the ice cream itself will include fragments of cocoa powder folded into it, and that they use about 5,000 tons of Fairtrade cocoa a year towards that base mix. Separately, they use around 4,000 tons of Fairtrade certified cocoa to go towards what they call their inclusion. So that includes chunks and swirls, chocolate chips, and other delicious chocolate-based items which you'll find in a tub of Ben & Jerry's ice cream. In terms of our work as Fairtrade globally, we're working with a bit over 400,000 cocoa farmers, the vast majority of whom are based in West Africa, particularly in Côte d'Ivoire, which is the largest cocoa growing origin globally, and also in countries like Ghana, Sierra Leone, and Nigeria. And in Christoph's presentation, he'll be bringing to life cocoa farming in a South American context through the case study content that he generates. For now, though, I'd like to scroll on from this supply chain overview to give you a bit more of an insight into the lived realities for individual cocoa farmers right at the beginning of the supply chain. Now, we've gathered average farmer data for Fairtrade certified farmers from 20 cooperatives representing 20,000 farmers. So the data you can see here in very basic top line level brings to life what the life of an average Fairtrade farmer looks like in terms of their farm size, number of cocoa trees, and so on. I'd just like to dwell on 2 or 3 points from this slide. The first is to flag that the average level of farm productivity for a fair trade farmer tends to be higher than for non-fair trade farmers. So you've got the 500 kilo versus 450 kilo threshold. And that's partly as a result of trainings that farmers receive by virtue of being part of fair trade certified groups. And that's partly, we think, also because of the fair trade premium, which enables farmers to make more intense investments into their farms. The household size is an average of 8 people per household. That will include 3 adults and 5 children, or effectively two parents with 1 adult child, and then 5 children under 18 on average. And that's true for both fair trade certified households in the same way as it's true for non-fair trade certified households. There's no difference in household size. However, there is a difference in the average household income that's generated by a fair trade certified household versus a non-fair trade certified household. As you can see at the bottom there, a bit over $4,000 per year for a fair trade certified household and a bit under $3,000 per year for a non-certified household. In terms of the breakdown of that income mix for a fair trade certified household, I hope this slide helps to bring to life the different ways that farmers generate that $4,080 figure per year. You can see from the left-hand side that the majority of income is generated from the sale of cocoa, with the revenue costs minus the cost of production bringing a net profit of a bit over $2,200 per year. The net profit from other goods in orange in the center represents other cash crops that farmers may grow on their farms beyond cocoa. So this may include things like chilies, for example, which are sold into domestic markets. And together they generate a total on-farm income of around $2,700 per year. We also count in-kind income towards the overall household income figure. So this may include staple crops like cassava, for example, that farmers would grow on their farms for home consumption. So not for sale into market, but for home consumption. As fair trade, we would count that as an in-kind contribution towards the overall household income total. And then finally, to flag just below $900 per year average, we see income from sources beyond the farm coming into cocoa farming households who are part of fair trade certified cooperatives. So it would not be unusual for one member of the household, for example, to be a taxi driver or to work in a shop or somewhere beyond the cocoa farm to derive an income towards that $900 per year target, or not target, total figure. Now, if I could just draw your attention to the right-hand side of the screen, as I mentioned earlier, the fair trade average income is higher than the national average household income in Côte d'Ivoire. However, it's still some way short of what we've referred to as the living income benchmark, which is about $7,500 per year. Now, this is the target which we are trying to support all farmers to move towards over time. And within the cocoa sector in general, there's growing recognition that the underlying economic poverty within which farmers operate is a huge contributing factor to many of the environmental challenges like deforestation and social challenges like child labour, which continue to persist in the cocoa sector today. So one of our main areas of focus as Fairtrade is working on novel ways of partnering with businesses to improve the profitability of cocoa farms through a combination of enhanced pricing, conditional and non-conditional cash transfers, and also exploring other routes to improving the efficiency and profitability of farms, including in relation to financing, which we'll be hearing from Christoph on shortly. To move on to financing needs specifically, this slide flags just a few of them from the farmer and cooperative level. On the farmer side, there are a range of seasonal financing needs, whether that's in relation to inputs for fertilizers, both for cocoa and non-cocoa activities, as well as seasonal costs related to casual labor. As I mentioned earlier, smallholder farmer households will bring on board casual laborers at times of planting and also at times of harvesting. There are also structural needs which face cocoa farmers. So every 5 to 10 years or so, farms will undergo what's called a renovation, where dead trees are removed and new trees are planted, which comes at some expense. At the cooperative level, there are a range of financing needs, principally including the finance needs to purchase cocoa from their members, in a timely fashion, as well as capital investment needs. So whether that's into storage equipment to prevent post-harvest losses, or into vehicles and other forms of investment which will help improve the efficiency in the transportation of cocoa, either from the farms to the cooperative or from the cooperative to other trade sites. In terms of existing financing, it's true to say that one of the requirements of traders who buy Fairtrade certified cocoa is that they're required to provide a level of pre-finance back to the cooperative to assist with the cooperative's financing needs. However, for the typical Fairtrade certified group that may sell, say, 1,000 tonnes of cocoa per year into market, not all of that cocoa will be sold on Fairtrade terms. So probably around 300 to 400 tonnes on average will be sold as Fairtrade certified cocoa to a trader looking to buy Fairtrade certified cocoa. The remaining 600 to 700 tonnes may be sold to a trader buying on conventional terms, where there may not be requirements around pre-financing in the same ways. So that still leaves the cooperatives with a financing gap. We do see particularly large-scale cooperatives forming links with local and national banks in their country of origin to access finance in different forms, whether that's for capital investments or trade finance. However, for smaller and medium-sized cooperatives, access to finance from banks continues to be challenging. So to draw my introductory section to a close, and before handing on to Christoph, I just want to draw a few conclusions together. Firstly, I hope you've seen through this brief presentation that selling on fair trade terms can tend to improve farmer income through a combination of better prices and more productive farms, and that fair trade standards through our ESG criteria help farmers to respond to a range of environmental and social challenges, which means that when you're buying a fair trade certified product, you're also supporting both of these narratives to be strengthened. And when you're investing into solutions which help to increase the range of produce sold in these terms, you're also buying into those same solutions. At the same time, even for fair trade certified cooperatives, there are still a wide range of financing needs which face cooperative organisations. And for us as fair trade, as I mentioned earlier, one of our overarching strategic priorities is to explore new ways in which we can work together with stakeholders to help farmers on the journey from their existing income levels towards the living income benchmark figure that I mentioned earlier. And perhaps in our discussion later, I'd be delighted to share further details on our work towards that living income target more generally, and to explore ways of partnering together. But for now, I'll pause and I'll look to hand on to Christoph to lead the second part of the presentations for this morning. Thanks so much.
Thank you, David. I'm just trying to share my screen as well. One sec. Okay. So now you should see the screen of my presentation, produced by FairCapital. We have founded FairCapital in 2019 with the mission to address the financing needs of the fair trade system, and are therefore working very closely with people like David to identify these financing needs. On this very first slide, I summarize the financing gap which exists throughout the fair trade system. For most of you on this call, this is no new information. You're all aware of the fact that in the global south, unfortunately, the banking systems tend to be rather inefficient and not focusing a lot on smallholder agriculture. Therefore, there is not only a financing gap in the very early stage of development of a smallholder farmer organization or an agriculture business, but also for senior debt. There is often very challenging problems like missing land titles and similar, which makes it difficult to have access to senior debt, long-term loans at reasonable interest rates. And even within the export finance or the pre-harvest finance, as it's sometimes called, there is still a huge gap. There is studies by other impact investors and organizations that show that even if there is already many different impact investors active in pre-financing the harvest linked to fair trade export contracts, that if the cooperatives, smallholder farmer cooperatives would have access to more financing, they could potentially sell more of their cash crops into the fair trade system. So we at FairCapital, we focus on all of these three areas in different ways. And we also recognize the fact that when there's further expansion in an agriculture business or a certified cooperative, that due to the limited access to international capital markets in the global south, there is basically still additional need. And we're also trying to find solutions how to help these organizations to access more institutional financing, larger amounts, or in even more liquid capital markets. The reason why we focus on all different areas is mainly because we believe that us having this flexibility to address different financing needs is a unique proposition that most impact investors with a fund structure tend to focus just on one or two financing products. But we also do it because, as you all know, the transaction cost is relatively high, especially in the very first transaction that you do with a smallholder farmer organization. Until you get to know the organization well enough, until you understand the governance, until you understand the social impact, but also the commercial potential and the financial soundness, it is a lot of work. So it's actually more interesting to work together with these organizations over time, and also as they evolve, continue to deploy capital into these organizations so they can continue to grow. I would like to explain you in more detail what we do using the example of Unoca, a smallholder farmer organization based in Ecuador, which has been selling cocoa for several years already to the second largest Swiss retailer, who has an in-house chocolate production in Basel. So we knew Unoca thanks to an introduction by the chocolate makers. So I met basically the general manager of Unoca in Basel a little bit more than 2 years ago, just before the pandemic. And we were very excited to learn more about them and visit them. But unfortunately, due to the pandemic, we were not able to visit them right away. We, however, still went ahead with the first transaction because there was a unique opportunity. So in the case of Unoca, their main client wanted to order more than 1,500 tons of fair trade organic cocoa per annum, but the infrastructure of the organization only allowed them to ferment, dry, and process a little more than 1,000 tons. So in addition to this main client, they also had other international clients which were interested because the cocoa was of very good quality, thanks to many years of investing in not only quality control, but also in the farms. And therefore, we saw that the market demand was there, and we wanted to enable the organization to meet this market demands and increase the income to Unoca and its member farmers. So the investment needed was basically the purchase of 2 drying machines. You see the example on the right in the slide. And there was a little bit of construction necessary. You see it's a very simple construction, just with the roof and some floor work. And for that, they needed $250,000, but they needed them quickly because they wanted to complete construction before the 2020 harvest season came to its peak. So we were able to structure a loan, even if all their assets were already pledged to local banks. But basically what we did is that we took some export contracts with the Swiss client as a guarantee, and also had a inventory monitoring process, which basically de facto allowed us to take the inventory as collateral for our loan. Now, before we paid out the loan, Unoca projected that they could double their sales with the installation of these 2 new dryers. And since they already were selling close to a little bit more than, well, it was just under, sorry, $4 million annually, we were a little bit skeptical if they can really double their sales so quickly just by this small investment. Even if we believed, their projections on papers, we were a little bit skeptical if they were not overly optimistic, but we were proven wrong. 88% sales increase just 3 months after the disbursement of the loan was the proof that their projections were right and that we underestimated their marketing potential. So here, I think we are looking kind of the best case scenario of what can happen if you provide access to financing to a well-established Fairtrade certified organization. For those who know a little bit the pricing in the cocoa industry, you will agree that at least 30% markup for the farmers themselves if they are able to sell it into an organization which is certified by Fairtrade and can export directly the cocoa, which is also then organic certified for exportation. So 30% on a $4 million increase in annual sales is basically just north of 1 million in extra income for the smallholder farmers a year by a small loan of 250,000 for its infrastructure. So this is for us kind of a very good example why it's worth looking at different situations in the Fairtrade system, and a certain flexibility to provide the best possible financing solution is necessary. By now, we also finance Unoca with the more standard export financing contracts so they can further grow. And we have also provided an additional loan to strengthen the member organizations of Unoca and their infrastructure and working capital to further improve I would say, the stability of the organization and its potential to grow further in the future. So it was a first step. It was a small loan. It already had a big effect, and it was for us basically a very good way to initiate this relationship. Unoca is known for really best practice and at all levels, not only commercially but also creating impact for the communities of its members. So they invest in different projects which are financed by the premium. They also have additional activities in order to support their members. And here we also included in the first bullet point one additional argument why we believe that investing in an established system like Fairtrade is very attractive for impact investors, because the Fairtrade premium can also be used to further invest in the expansion and in the infrastructure of an organization. So in the case of Unoca, by now the dryers are a little bit better equipped, and the construction around them looks a little bit nicer because they invested $160,000 in further expanding their infrastructure. So this is, from an investor's perspective, very attractive, because basically you're not the only one investing your money in the new infrastructure. There is also means which are available to invest in the infrastructure and the growth of the organization. This is why we believe that investing in Fairtrade is a great opportunity in impact investing. And of course, this is kind of the best case scenario, and it's not always that easy. I've also prepared an example from the coffee industry, which is a Fairtrade coffee cooperative in Peru. We also invest in artisanal gold under the Fairtrade standard. But at this point, I would like to hand over to Deborah and open up for the Q&A, and we'll see which part of our presentation you would like to learn a little bit more about and which topics you would like to discuss.
Thank you very much, Christoph and David, for this insightful presentation. We can move over to questions. I see we already have a few. I'll start with Rosalind. Would you like to share your question yourself, Rosalind? If not, I can share it for you. Rosalind is asking whether Fairtrade partners also include insurance companies to help stabilize commodity prices, price volatility, example cacao, outside farmers and corporations control and also loss of production, risk due to flood and disease, etc. I think this question is meant for you, David.
Great, yeah, thank you. I mean, I think I'd say our only intervention at the moment in relation to price is through the minimum price setting mechanism that I mentioned up top. So the price setting mechanism that we apply is very commodity specific. In the context of cocoa, there is actually a government minimum price in both Côte d'Ivoire and Ghana. In the event that that government price goes below the fair trade minimum price, the fair trade minimum price would kick in for cocoa sold on fair trade terms. So in a sense, that acts as a natural insurance mechanisms for farmers who are fair trade certified, who are selling their produce on those terms. I am aware in some contexts of insurance mechanisms which do exist, which farmers can access on a cooperative by cooperative basis. However, in relation to work that we're supporting at an institutional level, we don't have strategic partnerships with insurers working with cash crop farmers kind of on scale. And I'd say our main intervention from a price perspective is purely in relation to the fair trade minimum price, which is something which we encourage businesses to adopt in their sourcing of fair trade certified produce, but also to replicate. And we see examples of businesses who have developed for themselves their own minimum pricing guarantees for farmers that they work with, which again acts as a kind of pseudo insurance mechanism to protect those farmers from pricing shocks.
Thank you very much. Sorry, my mute didn't unmute in time to ask my own question. As a quick follow-up, what I was thinking about was being able to join up financing sources with insurance sources, because my main thing in my head for helping the farmers was to minimize the cost of financing, which is going to be a function of the risks that the banks or the impact investors have to bear themselves. So if you're looking at financing partners, I think it would be fantastic if you could get them to agree to be in a triangle with insurance companies as well, to take away as many of the risks that are pushing the price up on the cost of borrowing as possible. And some of it, I think, might be able to come from government sources. Thanks.
Great. Thanks so much, Rosalind. Taking note of that for sharing internally. Thank you.
Thank you both. Over to the next question from Sarah. Sarah, do you want to share it with us? I think
yes, sure. Do you hear me, David?
Yes.
Yeah. I have two questions, and you might choose to answer only one depending on the time you have. Maybe the first one has to do with, and this is a very naive question, I wonder if there's a role at all for commodity exchanges in allowing flow of financing for fair trade commodities. And my second question has to do with technology. We see a lot of ag tech platforms that are coming up, including some technology that allows to quickly evaluate the quality of certain crops. And I'm also obviously thinking blockchain and the ability to trace, to improve traceability, let's say. Do you see a role generally in your space for technology to accelerate the flow of financing into fair trade supply chains?
All right, yeah, thanks so much. I'll maybe take the second question first. Yeah, we are looking into technological solutions basically to shorten the distance between the trader and the farmer. So one of the mechanisms we're looking into is related to both conditional and non-conditional cash transfers via mobile phone payments. And that's something which has not launched so far, but that's just an example of something we are looking into behind the scenes. In relation to traceability solutions, we do have a system at the moment called Fairtrace, which we use to track the flow of produce through cash crop supply chains at each point. That is currently not backed by blockchain, but again, that is something which our team on the Fairtrade International side are looking into. And yeah, we'd be delighted to share developments with this group as and when that technology develops further. In relation to the role of commodity exchanges in financing trade, I have to say this is not my area of specialism. So I'd say I have a very limited answer really, which is to say we work with and through established traders, with and through established cash crop trade networks. So in the context of cocoa, for example, we work with all the big traders, whether it's Barry Callebaut, Olam, Ecom, who are buying cocoa as their daily bread and butter, with the one difference that when they source in Fairtrade terms, they'll pay the minimum price and premium and provide pre-financing solutions. Now, where those entities get their finance from, I mean, that may be for a discussion with those entities rather than with Fairtrade. I don't know, Christoph, from your perspective, if you'd have anything to add on that second point specifically.
Thank you, David, and thank you, Sarah, for this question. So for us at FairCapital, the use of technology is key. We already work with different agriculture technology players in the field. Obviously, when we talk about de-risking, I agree, with the earlier question that insurances for certain risks could be very useful for us as impact investors. However, also technology and data analysis is a factor where we see still a lot of potential. So I would say that the use of blockchain for increased transparency, the use of expertise to determine the quality of the crop, that's one factor. However, we must not forget that first, pre-harvest financing is not the only thing that the farmers need. They also need longer-term financing solutions. And secondly, no matter how good the cocoa or the coffee, and no matter how good the export contract, something may go wrong. And I mean, it happens all the time, and most impact investors, they can tell you exactly how much they have to write off each year,
Sure.
which obviously then drives up the financing cost for the pre-harvest financing as well. So I believe that there is still, a need for the expertise and competence that we and other professional impact investors have to assess the credit risk of a smallholder farmer organization, which is linked to obviously the political risk of its country. It's linked to the governance risks of the organization, but it's also linked to the operational risks and the commercial risks. Here, I would say that the Fairtrade standard provides a unmatched opportunity for people who would like to invest in agriculture, because the Fairtrade contracts, they have a minimum price, but they're mostly with open prices. So basically it means that the farmers, they know they will get a minimum price, even if the markets drop. But if the markets move up, they will get the market price plus the premium.
Okay.
Also, the traders that purchase Fairtrade certified crops, they usually are there to engage in the long term with these organizations. They're more sustainable traders in general terms. And there is basically almost no commercial risk in such a transaction, because you already know who's going to buy it, who's going to pay for it, and you know that the price is going to be very attractive for the smallholder farmers. So in our experience, it's always the Fairtrade organic contracts which will be fulfilled, even if a harvest season is maybe not so good, even if the farmers are struggling to meet the demand for their crop. But with the Fairtrade organic double certification, we have the highest demand, we have the highest prices, and we really believe that there is a system out there which is worth leveraging on.
Right. Thank you for the very exhaustive response. It seems to me from what you've described that there should be very limited gap, considering the low buyer's risk. There should be limited gap into the fair trade financing by banks that are in import exports, invoice discounting type of business, because that sounds fairly similar. I'm surprised this is not picking up faster.
But we finance, when we talk about pre-harvest, we really mean the loan goes out before the harvest season starts. That's the difficult part. The easy part is once the container is under ship.
Yes.
So this part is relatively easy to finance, but until you really have, a confirmed inventory controlled by a third party and insured, until then, traditional banks shy still a bit away from the risks unless they get additional collateral from the cooperatives.
Super. Thank you so much. All clear for me. Thanks.
Sure.
Thank you, Sarah. Thank you, Christoph. Any more questions? You can post them in the chat box. In the meantime, I have one. I was wondering, David, you mentioned that a huge or a big amount of the produced goes to non-certified corporations. Now, is there anything Fairtrade can do, incentives, so farmers only sell to certified cooperatives?
Yeah, so to be clear, I'll just kind of retrace that part of the supply chain to start with, so we're clear on the different stakeholders, and I can come to your point around where the finished product or produce actually ends up. So farmers who are members of Fairtrade certified cooperatives will sell their cocoa, in this case, to the cooperative structure. The cooperative will then have a total volume of cocoa which is available to be sold on the open market. Now, as Fairtrade, we are a market-based solution, which means that Fairtrade cocoa can only be sold if there's a demand for that cocoa from market actors. So in order for cocoa to be sold as Fairtrade, it needs to go to a trader who is looking to buy the cocoa on behalf of a company who would like to use that cocoa in their finished product as Fairtrade. So in the example that I gave earlier, the Ben & Jerry's example, Ben & Jerry's would instruct their trader Barry Callebaut to purchase, say, 5,000 tons of Fairtrade certified cocoa from a collection of groups, and those groups would sell their cocoa to the trader in exchange for the Fairtrade minimum price and premium. In a sense, I mean, of course, the groups themselves would love to sell more of their produce into market on Fairtrade terms, but for that to happen, there needs to be a demand for produce on those terms from traders, who in turn receive that demand from businesses, who in turn receive that demand from consumers. So one of the biggest ways that we can increase the sale of produce on Fairtrade terms for producers is to increase consumer demand. And I think one of the challenges that we as Fairtrade face is we're a system that's been around for 25 years or so now. And in many European countries, we're an established presence. However, the needs facing many smallholder farmers remain acute, and the need for selling their produce on fairer terms remains just as relevant today as it has done over that 25-year period. And when you look at the data which shows in the cocoa sector, for example, that 75% of farmers in West Africa continue to live in extreme poverty in the context of an industry that's worth over $100 billion per year annually, you can see the discrepancy between both ends of the supply chain and the need for as much produce to be sold in Fairtrade terms as possible.
So you would say that the responsibility is actually with the consumers, what they decide to consume. Do you think have you seen a rise in demand in the past years in regard of fair trade products? Do people want to have more fair trade products, or has it stayed the same?
Yeah, so I think the answer varies according to market. So in the German market, for example, we have seen a recent increase in demand for Fairtrade certified produce, actually driven somewhat surprisingly by some of the discount retailers like Aldi and Lidl, who are some of our largest partners globally. And I think those kind of entities show that even for discount retailers, it's possible for the responsible sourcing of raw commodities to happen into finished products at scale. In other markets like the UK market, Fairtrade's recognition and trust among consumers remains very, very high. Sales of Fairtrade certified products on an annual basis in the UK are stable and growing incrementally, but not as much as they have done in previous years. Whereas, as I mentioned, in other markets like Germany, to an extent the US as well, there is increased demand for products. At the same time as kind of looking at that question through the lens of Fairtrade sales, I think we can also look to other routes of driving impact that I mentioned earlier on in my presentation, that we recognise the sale of Fairtrade certified products or produce is one route to driving impact for producer organisations, but we're increasingly looking to more novel forms of partnership with other stakeholders who are in a position to invest into financing solutions and/or to invest into programmatic solutions within cash crop supply chains to deliver impact for producers.
Thank you very much, David. We have a question from Richard. Do you want to share your question, Ian?
Yes, thank you. I just wondered if David or Christoph are seeing financiers of smallholder fair trade value chains adapting their offer to the challenge of climate change and in recognition of the proven benefit of women's economic empowerment, or organisations where women are well represented. And if they're not, I just wondered if they could give us some ideas of whether they should be and how.
Excellent, thank you so much. Well, I suppose it depends a bit which investors we're talking about, but if we're talking about impact investors and people with a clear ESG strategy, then I would say yes. Most of us are aware of you know, the complexity of the agriculture sector and the different problems that we need to address, and it goes very well actually hand in hand, because clearly women empowerment is part of the fair trade standard. Clearly, having a diverse management team and the representation of women on the boards of these smallholder farmer organizations is best practice for stable governance and good operations. We are lucky to have actually in our portfolio quite a few, I wouldn't say half of them, but quite a few cooperatives which we finance, which have female leadership, where the general manager is a woman and where women are well presented on the boards. So this is definitely something that we support and favor, and it is you know, covered by the fair trade standard to a certain extent. So I would say yes. And when it comes to the climate crisis and what can be done at the smallholder farmer level, I think there, yes, most impact investors, they are interested in seeing how they can kind of solve different problems with the same investment. And clearly, you know, reforestation is a big topic in the smallholder organizations. And there is a lot of programs within fair trade and outside of fair trade, which are contributing to a carbon neutral economy. I think there, the only line that we draw at FairCapital is that if smallholder farmers are contributing to solving the climate crisis by planting trees, that there should be an immediate benefit, maybe very small, but there should be a small financial benefit for them as well. I think it's not realistic to want them to do all the work for us, just that they you know, can continue to sell their cash crops at a very bad price and remain in poverty while you know, they're solving the climate crisis for the first world. So that's I think where we draw the line. But we are currently looking at different initiatives. We have already invested in different reforestation programs with long-term loans. So yes, this is something that we find very interesting because it goes hand in hand with the fair trade standard and what it stands for.
Thank you, Christoph.
David, would you like to add to that?
No, I think you gave a great overview, Christoph, of the benefits of the fair trade standard as a starting point. I think maybe just to touch very briefly in relation to climate, I can circulate this with you afterwards, Deborah, for sharing the group more widely. We are exploring carbon credit solutions and other solutions specific to the climate crisis, which may be of interest to this group, but I'm mindful of time, so I'll maybe look to share a series of links after this call is complete.
Thank you, David. And happy to share that, of course. We have 3 more minutes left. One final question to you both, maybe just very quick. Where would you like to see your organizations in 10 years?
I think it's more interesting if, David, you answer this one. I think, you know, for me as an entrepreneur with a small investment firm, obviously we would like to grow and continue to support the fair trade system with our mission. We will have another session in March where we present a little bit, you know, the more innovative financing solutions that we're currently working on and currently using. Use of technology, I already addressed that, so I would prefer David to have the last word in this session and tell us a bit more about the future of fair trade.
Great, thanks, Christoph. I mean, I think probably our 3 hopes would be that fair trade is seen as the norm. Fair trade is not seen as some exceptional step that businesses need to take to improve their sourcing, but sourcing on fairer terms of trade is an established norm. And as I mentioned, if discount retailers like Aldi and Lidl can buy into responsible sourcing practices at scale, we think that lays a blueprint which stakeholders of all sizes and in all markets can replicate. I think secondly, we want to shorten the distance between consumers and smallholder farmers, and we think that technology has a really important role to play there. Some of the solutions which we have rolled out already in some markets include, for example, QR codes which consumers can scan to see exactly which group their produce came from, to understand the impact of their sourcing on fair trade terms. And I think finally, we would want to be seen as an organisation which is achieving scale, not just through fair trade partnerships on the trade side, but also deepened partnerships with stakeholders in new spaces, including with the impact investor community. So we would love to be in a position in 10 years' time where we're able to say that we're no longer working with 2 million smallholder farmers purely through a standards and audit system, but we've expanded our scale to reaching 4 or 5 million farmers within that time frame. So that's a flavour of some of the ambition we have for the time ahead.
Thank you very much for those closing words, David. And thank you both for this very insightful presentation, and to all the attendees for joining us today. For those that have joined us in the session a little later, part 2 of our session will take place on March 16. An invitation will be shared with you in the coming weeks. If you have any additional questions or would like to connect with David or Christoph, you can reach out directly to them. I'll share their contact information in the follow-up note, along with their presentations and the recording, which you are welcome to share with your network. Anyone you know that should meet our speakers today, please make sure to connect them. It was a pleasure to be here with you today, and thank you again to our speakers. I wish you all a wonderful rest of your day. Goodbye.
Thank you. Bye-bye.
Bye.